Okay, folks, welcome to Introduction 1.2, utilizing the daily open in intraday trading. The daily open is the open of the midnight candle at UTC +1 to avoid confusion. So that's UK time at midnight. So we treat this in the same way as Asia, Frankfurt, and London highs and lows as a liquidity level to be swept into a trading level and then looking for confirmation. It's an extremely powerful level. But with that said, I'd like you to approach this level with a little more caution, as it can sometimes be a bit more unpredictable. We can discuss this in the group in more detail. I'm just going to slow this down a little because I don't want the level to be hit before I'm actually ready. So I didn't cherry pick this example, and to be honest, it's not the best example in the world, but still illustrates the point quite well. So in the morning routine, which I'll share at the end of this module, the first task is to mark the daily open at UTC +1. That's the open of the candle at midnight. For this example, I'd like you to use your trader brain and notice the two short-term highs before the daily open and mark raise on these as possible liquidity targets. So we'll just get there right now. Okay, so I noticed this is the previous day's New York high. So I'm just going to mark this with a ray. We're still at the previous day. We've not reached midnight yet, and this is towards the end of the New York session. And now we're approaching the Asia session around Sydney. And then there, that's the daily open. So here we have a high, and that's going to be considered the Asia high for this purpose. Okay, and the daily open, midnight open of the candle, okay? Got it. Perfect. Nailed it. Okay. So we have previous days New York high. So I'm just going to mark that out. This is also a key level. And we have the Asia high. And we have the daily open. So another point is that previous sessions, the highs and lows are important. We just happen to have the Asia high, previous day's New York high here, so it's kind of a triple threat. It's potentially a really good trading opportunity. What we also have is an imbalance on the left here. We have an H4 supply, so this looks like it's going to be a really good short at this point, and we should be ready for this. So what we're looking for is a wipe of all these levels. Let's say these two levels weren't here and we only had the daily open, then fine, that's a key level too. If we wipe that, came into a trading level, found confirmation, we could also short. So let's just see what happens. So this purple level, I'm going to put this in the homework, and I'd like you to tell me why I've marked this out, this level, this price in particular. So I'll just speed this up a little bit. So edge low set, and now we're just waiting for a wipe of these three levels. Daily open still not touched. Okay, that's it pretty much done. What we've done is wipe the daily open, Asia high, and nearly just about the previous day's New York high. There it's done. So around here, we can start looking for shorts. What we're not gonna do is just start shorting randomly here, just because these key levels have been wiped. Yeah, we're in supply. This is actually a significant level, which we'll get into in more detail. It's related to this imbalance. But what we're going to do is look for confirmation here, just in a very basic price action way. So what we notice is a break of structure here and an M5 supply created. And mitigation of the M5 supply. So what we can do, we don't need fibs in this strategy, but I like to kind of pull them out just to refine entries sometimes. When we're entering on pullbacks, we're never entering on imbalances below the 50% level. It's always above the 50% level. But the fib's not necessary. It's just kind of like, it helps guide me in my entry basically, but we're really relying on the futures footprint. So we'll leave it here for now. Mitigation of M5 supply, displacement, an imbalance is created in the futures market. And we could have entered short here, essentially. We've come within like a premium trading area. We've mitigated easily. You could have shorted here with a very tight stop loss, but let's say you missed it and it happened so quickly. Then we have this quick test of an imbalance, and that could have been your short. Okay. If this seems complex, it's because it's speeded up. It's usually going to be a lot slower in real time. So let's say we are short. Use your like 2 or 3 pip stop loss because it's on an imbalance. I'm gonna go to, let's say 2.5 to cover spreads. And remember, we're deciding our target before we actually enter the trade. So what do we have? Asia low is the kind of next key level. Is it gonna hit? Yeah. So that's a 13-hour trade, just using key levels. Daily open, Asia high, previous day's New York high. We're in a fair value gap and an H4 supply. We use confirmation by using a break of structure and then retest of a fresh M5 supply. Let's say we missed it, then we could still use the futures footprint to find an entry and still get a great 10-hour trade for the day. So that's just one example of using the daily open. This one isn't as clear cut because, well, we had other key levels as well. So I will put more examples in this up, but that's just kind of a primer. So again, thank you for listening.